Reports indicate a significant shift in the power dynamic on the northern border, described now not as a sideshow, but as an unfolding reality drawing an explosive reaction. The situation has captured the attention of markets, corporate boards are recalculating, and diplomats are reportedly choosing their words with extreme care. Inside the orbit of President Donald Trump, the mood is characterized not as irritation or frustration, but as fury. Observers suggest Canada has once again navigated the situation effectively. While Washington continued to escalate, branding actions as shows of strength, Ottawa continued to move pieces, absorb pressure, and convert chaos into leverage. The result is described by some as humiliatingly clear, with figures like Carney continuing to stack wins and Canada pulling ahead. Consequently, American consumers, American companies, and American political credibility are reportedly picking up the bill. This development is viewed as significant on a broader level, representing more than a single insult, terror fight, trade headline, or bruised political ego. It is framed as a test of which nation can actually convert instability into advantage within North America. This is characterized not as a routine policy dispute, but as a strategic contour for capital, manufacturing, energy, investment confidence, supply chains, and political control of the narrative. Observers see one side attempting to dominate through volume, pressure, and spectacle, while the other side is winning through discipline, timing, and cold institutional competence. This is identified as the central story. The immediate event stems from an attempt by the Trump administration to project a show of force, intended to present Canadian pressure as a demonstration of American strength and Canadian submission. The strategic intent was to follow an established script of threatening and dominating to declare victory. However, reports indicate the opposite has emerged. Canada did not buckle, and Carney did not flinch under pressure. As Washington pushed more aggressively, the cost structure began to tilt back onto the United States, creating what analysts describe as a strategic trap. When a leadership attempt to project power results in higher domestic costs and stronger positioning for the opposing side, the political performance begins to collapse. This directly impacts the core of the Trump political brand, which relies on the image of making other countries pay and breaking weaker leaders. In this instance, the pattern appears reversed. Canada is adapting and repositioning, while the price burden ricochets back to the US through supply chains, procurement costs, and market anxiety. Carney's approach is central to this reversal, utilizing a measured, technical authority and a calm demeanor that contrasts with the more theatrical rhetoric from Washington. This contrast is being viewed by investors as a signal of stability. Mechanically, the integrated nature of the North American economy, spanning cars, energy, and food, means that weaponizing the relationship triggers blowback. Every escalation from Washington has reportedly resulted in factory planning adjustments and investor caution within the United States. Consequently, the private sector has responded to the volatility by looking for risk buffers, with capital increasingly rewarding the predictability offered by the Canadian jurisdiction under Carney's leadership. Behind the scenes, the conflict has shifted toward a competition of institutional styles. While the Trump administration operates on a model of rapid pressure and shockwaves to create advantage, Carney is reportedly utilizing a systems strategist approach, prioritizing market credibility and long-term signaling. This resistance through competence is making it increasingly difficult for Washington to frame the narrative as a simple win. Corporate America and international allies, already sensitive to thin margins and election risks, are reportedly viewing Canada as a more reliable partner for continuity in sectors such as energy, defense supply, and advanced manufacturing. Strategically, this is no longer a contest of rhetoric, but a competition for the next decade of capital placement. Decisions regarding the location of new factories, rare earth processing, and infrastructure logistics are being weighed against the stability of each jurisdiction. Analysts have identified three major implications. First, the high cost of performative nationalism in integrated supply chains. Second, the ability of a smaller power to leverage discipline and timing to offset a larger neighbor's volatility. And third, a shift in North American diplomacy, where allies may no longer view Washington as a predictable anchor, leading to strategic hedging. The resulting asymmetry is described as a domestic political challenge for the Trump administration, as voters and businesses face higher costs without a visible strategic prize. If Canada maintains its current resilience, the pattern of escalation followed by American economic blowback risks becoming a permanent feature of the relationship. As both sides dig in, the focus remains on whether rhetorical volume can overcome the underlying economic scoreboard. For more in-depth reporting on the evolving power balance in North America, subscribe to our updates.